Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in this live stream, we're going to start by talking about our analysis on Aussie dollar and what we're anticipating to see in the marketplace. So the first thing to look at is the fact that let's use a fresh chart here. So overall, we still remain bullish on Aussie dollar in anticipation for a continuous move to the upside. I still want to see Aussie dollar visit this key level. But before that, my major focus is the inefficiency resting right here, because if we use our Fibonacci, because this is our range low and this right here is our range high, and if we use our Fibonacci from the range low to the range high, this right here is our discount position. So if we want to buy at a discount, and if we want to sell at a premium. And you can see how price came to this extreme premium zone, and after that we displaced to the downside, came back to the extreme premium zone again, we displaced to the downside again. Now what we're looking for is an opportunity for price to come down here. We're not looking for a sell, because we only want to buy with the overall bias. And right here we go to daily time frame. You can see on the daily time frame we have an inefficiency resting right here. As you can see already, we're in a premium. If I want to sell, I'll most likely prefer to sell it at a premium. But in this case, I'm not going to sell it, but I'm just going to analyze if I was to sell. This is what I would have done. So right here, price mitigating this position, I'll be looking for a potential 30 minutes shift in market structure. And right here, as you can see, we have a low right here, and we'll have a high right here. So for me to flip bearish in anticipation to see price gravitate to the downside, to dive into the discount position, I'll most likely want to see a run on this sell side liquidity. Now if we go to the 4-hour time frame, we scale down to 1-hour time frame. Thank you so much for your confirmation. I'm gonna have the title adjusted. I'm gonna have that adjusted in the next live stream. So let me see. Okay. Yeah. All done now. I've changed the title to a tint. Thank you so much. So now looking at this right here, you can see that after price went to the upside, took liquidity from this high right here. After taking that liquidity from here, we dropped to the downside, breaking this low right here. You can see the low. This low got violated, and this was the last impulse move to the upside before dropping to break that low. This was the last impulse move before it dropped to break this low. So this also makes it a key level. This also makes it a key level to anticipate for price to mitigate. And after that mitigation, we would like to see a 5 minutes break of structure. And right here we'll have a 5 minutes break of structure. So after a break of structure, I would like to see a retest. If price can drop below this key level to break it first, then that would even be better, because I'll still want to see a retest at this key level right here. I still want to see a retest here before a potential continuation to the downside. So if we go to 30 minutes time frame, this is the 30 minutes time frame low. So far, once this 30 minutes low right here gets broken, my next draw on liquidity is going to be this low right here. This is going to be my next draw, and as you can see, we also have low resistance liquidity resting right here as well. Go to 4-hour time frame, and on the 4-hour time frame you can see our inefficiency. So the moment price comes into this inefficiency, I'll be looking for a 15 minutes break of structure to the upside. Once I see a 15 minutes break of structure to the upside from here, I'll be looking for a buy to continue higher to run this low resistance liquidity, and also potentially rally into this inefficiency resting right here on the daily, inefficiency on the weekly as well, and also most likely rally above this buy side liquidity, low resistance liquidity. So that is my analysis on what I'm watching on Aussie dollar, and it would have been a beautiful trade for itself if we're looking for an opportunity to sell it, but I personally don't count the trend because the overall trend for me is bullish. So all I'm looking for is an opportunity to buy Aussie dollar. It doesn't mean that opportunity like this is not gonna work, but in my opinion, it's low probability because price can still want to go higher to run even this highs right here, even though this is a high resistance liquidity, and that is part of the reason why I think it's gonna hold and price will react from here to continue lower. But at the same time, I'm not gonna take a sell from here, but I'm just showing this to you in case if you feel like you want to take a trade off this key level, this is going to be a good sell opportunity from this key level to sell it down into a discount position, or you can even sell it to an equilibrium. So the blue line right here is the equilibrium line. You can see that this is equilibrium. Anything below it is discount, anything above it is premium. So let's say I'm looking for a sell from here, from this key level. If I'm selling it, I'll be closing the sells from this position, the equilibrium zone, and I'll be out of the market. The reason is because price can mitigate this equilibrium, tap a little bit inside the discount zone and still spike up to run your stop losses. So it's best, the moment we mitigate the equilibrium zone, it's best to close any sell position and be on the sidelines, because right here, if we do catch a buy from here, it's potentially going to be an explosive move that can easily rally above this low resistance liquidity highs here. So that is my analysis, and that is what I'm watching to see on Aussie dollar. If you do have any questions, feel free to drop it in the chat. The next one, we're going to have a brief look on the dollar, what the dollar is doing so far. You can see what dollar mitigated right here. We mitigated an inefficiency, and after that mitigation, we're seeing this rejection and reaction from that key level. Potentially, I wouldn't be surprised to see the dollar gravitate above this key level to run the highs. And you can see on the 4-hour time frame, there's still an inefficiency resting right there as well. And right here, we'll have a high, a low, a higher high, a higher low, and a higher high. So I wouldn't be surprised to see a higher low and then a potential higher high to rally above this high right here. So if we do rally above this high, I wouldn't be surprised to see the dollar edge even higher, potentially hunting for this low resistance liquidity highs right here. So that is what I'm watching on the dollar, and there's not really so much going on for the dollar today. And if we take a look at US oil, as you can see, low resistance liquidity, relative equal highs. After price mitigated our key level resting right here, then we saw an expansion. One thing to take note of is the good thing about this analysis is if you're someone who is very busy and you don't have time to be pressing the button, taking trades here and there, this is actually one way to use this analysis to your benefit. So if you're someone you like to invest in like oil, When price came into this position, this is an extreme discount zone. You could have used that opportunity to buy. You can just open positions for whether it's a call position or whether you're buying shares of oil. So rather than trading it with leverage, you can say, okay, this is just an example. I have $7,000 to put into the market. When price was right here, if you had put in that $7,000 into oil buying shares, you most likely would have bought about so 73,000 would buy you 1,000 shares. So 7,300 would buy you 100 shares of oil. And right now, that $7,300 would have been what, $8,000 right now, which is still a significant increase in that amount. And this is just you pressing the button just one time and allowing price do its thing, because I'm still very much bullish on oil and I still want to see oil continue higher, potentially even going above $90 and potentially going above $100 in the long term. Because if we're looking at the overall structure, on the weekly time frame, you can see that we're very bullish, consistently creating higher highs. So right here we have this lower high, lower low, and then we broke structure right here, creating a higher high. So I wouldn't really be surprised to see a potential continuation on oil to even rally above this low resistance liquidity, which is at 120, 130. So that is what I'm watching. So for oil, it's still very undervalued right now in my opinion, and I'm watching to see whether potentially price is going to come to a discount one last time. And I was looking forward to buying it from here, but I didn't see any 5 minutes or 15 minutes or even 30 minutes shift the market structure to the upside, which just discouraged me in looking for a buy, because I need to see my model present itself on any pair that I trade. If I don't see it, then I'm just not going to execute. That is just how I trade. And potentially you can see how, even though everything aligned, price came down to my extreme discount zone, broke structure, but it failed to retest my key level. So what do? I'm just going to sit on the sidelines. There's not much I can do if price does not mitigate my key levels. So right here is my key level and it wasn't mitigated. So I'm just going to have to either wait it out or just not trade it at all. But if you're someone who's more interested in investing, you can use this same strategy in investing, waiting for price to come to extreme discount levels like here. Once we're there, you can just you can just buy the shares of that, whatever asset class that is. So in this case, it's oil. You can just use like things like trade 212 and basically automatically tell you when oil comes to $73, just buy maybe $500 worth of oil or $1,000, just whatever you can afford to lose at the end of the day, because everything in trading is a risk. There's no certainty. In as much as I believe this should really rally to the upside, there still isn't any certainty that's going to happen. That is why we always use risk management, so that if it doesn't go our way, we lose very little. If it goes our way, we win big. So that being said, we will take a brief look at USD cards today to have a better understanding of what USD card is doing. So looking at USD card on the 12-month time frame, we can see very clearly we created a low here and a high, and then right here we'll have a lower low and potentially price broke structure right here. After breaking structure, you can see we'll have this very nice inefficiency resting right here. You can see the inefficiency. So if I was bearish on USD card, this would be a perfect area for me to consistently look for a sell. If we go to monthly time frame, on the monthly time frame, after we mitigated the position, you can see a monthly time frame we have a low, and then I'll make this a different color. So as you can see, we have a low, we have a high. Right here we'll have a low, right here we'll have a high, and eventually this low has not been broken. So if this low had been broken now, I would have been way more confident for sales for USD card. and I'll be looking for a potential continuation to the downside. But also remember that the fact that this low hasn't been taken still means that there is liquidity inducement right here, because this now becomes a low resistance liquidity. So whenever price do decide to run the low, it's literally going to violate it very violently. So we go to weekly time frame. On the weekly time frame, we want to focus on the structure on the weekly time frame, and on weekly time frame, all we can see a low, a high, and then right here, this is our new low. Now we want to check if there's a break of structure. We use this. So as you can see, price closed below that low, but we'd have this week's, it's not really a clear break of structure, in my opinion. It's not really a clear break of structure, but the next thing we do, we watch for key levels that price could potentially come into, because we have this is the major key level. And right here, if we're going to see a major sell-off on USD CAD, it's going to come from this key level. And so far on this key level, you can see how price has been creating low, high. So we're still within this range low, this range high, and we've not broken any structure to the downside. So this is why personally, in as much as my 12-month time frame is showing me bearishness on USD CAD, I'm just not so eager to sell it, because I've not really seen any significant break to the downside. I really need to see a significant break to the downside for me to confirm and start looking for a sell on USD CAD. That is why for now I'm just standing on the sidelines and I'm watching to see what price is going to do, because in as much as 12 months is bearish, price can still expand higher to run this buy side liquidity one last time, because we still have low resistance liquidities resting right here. So that's also an easy target. Price can expand exponentially higher to rally above that key level. Now let's look at this on the buy side perspective. What is price showing us on the buy side perspective? Overall, as you can see, overall, this is my overall swing low. And this right here is my overall swing high. And if you use the Fibonacci from the overall swing low to the overall swing high, you can see we came to a discount zone, expanded higher. Now we look at structure. Price is creating a high, a low right here, and then we'll have this high, a break of structure, and this right here, last down close candle, last down close candle before an expansion to break structure. Price came back into it. All we want to see from here, 15-minute shift to market structure. And right here, we'll have a high, a break of structure. After a break of structure, last down close candle. As you can see, the last down close candle right here, we mitigated it, rallied, came back, took liquidity, mitigated this. So we wait for 5-minute shift to market structure from there. And right here, you can see a high, we can see a high, a low, a break of structure. So personally, for me, if I was to look for a trade setup for USD CAD, it would be a buy, and this would be the entry, stop loss, and the take profit. Take profit, I'll be targeting for price to run this highs eventually. So that is what I'm watching for USD CAD, and I'm gonna put on a lot right here for USD CAD. If eventually we do see price come down to run this liquidity, then I'll be looking for a potential entry from this key level. But if not, then that means we've already missed the trade. So that is what I'm watching for USD CAD. If you do have any questions, feel free to drop it in the chat. And before we go, let's have a look at gold, see what gold is doing as well. Nothing really much to see on gold. Still the same key level we're watching. Still need to see gold come down there. And for pound US dollar, went to the upside, mitigated the daily inefficiency, rejected off that position. I won't be surprised to see a run on the sell side here. Euro GBP, my key level remains the same. This key level, if I'm bearish on Euro GBP, I want to see price come in here, and then I'll potentially look for a sell setup to continue lower. So that is my analysis. I appreciate you all for tuning in, and I'll talk to you all next time. Have an amazing day, everyone.